Buyers in today's market are faced with much higher interest rates than just a few months back. Now, if you're a buyer, what can you do to lower your interest rate? Well, that's going to be the subject of today's video, and we're going to get started right now. Hi, my name is David Matney with Nebraska Realty. I'm a local realtor here in Omaha, Nebraska. Now let's jump into today's topic. When you contact a lender to inquire about interest rates, you might be quoted a rate of 6%. Well, you're doing your shopping and you go online and now you're quoted a rate of 5.5%. And you're thinking, hey, that's great. I'm going to be saving some bucks. But what you may not realize that in order for you to get that rate, you may have to pay points. Now, points are prepaid interest. Many buyers may not understand that. They just see the lower rate when they go online. That's why you want to get pre-approved with a trusted local lender. That local lender may be able to do the exact same thing, maybe even a little bit better. So before you decide to go with that online lender, be sure to speak with a local lender first. If you're looking for a local lender here in Omaha, Nebraska, the idea for today's video is from Paul Kottich. Paul is a local lender here in Omaha, Nebraska with People's Mortgage. I'll leave Paul's contact information in the description below. What is a 2-1 buydown? A 2-1 buydown is a mortgage loan option in which the seller, the builder, or the borrower buys down the interest rate for the first 2 years of the loan. Let's say your interest rate is 6%. In a 2-1 buydown, the interest rate for your first year is 4% instead of 6%. And in the second year, the interest rate is 5% instead of 6%. And in years 3 through 30, your interest rate is locked at that 6%. Okay, let's take a look at an actual example to kind of break down your payment each year. What does it actually look like? Okay, we're going to do conventional financing with a sales price of $250,000, 5% down payment, and a FICO score of at least 740 or higher. Your loan amount would be for $237,500. Okay, what is the breakdown each year? Okay, in year 1, your interest rate is at that 4%. Your principal and interest payment would be $1,133. In year 2, you're at that 5% interest rate, and your principal and interest payment would be $1,274. In years 3 through 30, you're at 6% interest, and your principal and interest payment would be $1,423. What would it cost to do this? Now, nothing is free. In this example, it'll roughly cost you around $5,200. Why would you want to do a buy down? Let's say you just got out of college and you're expecting an increase in income over the next several years. Well, this might be a good way to afford that home early on. However, you got to keep in mind that you would still need to qualify at the initial interest rate of 6%. Now that we're in this changing market and we're seeing the market shift, if you're a buyer, one of your negotiation strategies is to ask the seller or the builder to pay for the cost of a 2-1 buydown. Do you want to know another great strategy? Hey, be sure to hit that subscribe button and go ahead and ring that bell for notifications so you're notified every time I post content into my channel. And if you don't mind giving this video a thumbs up, hey, I really appreciate it. In a shifting or normalizing market, as a seller or a builder, you can use a 2-1 buydown to use as an incentive to a potential buyer to make your home even that much more marketable. You know, obviously, you want to reach out to a local lender for the specifics. As with any loan product, there's going to be restrictions involved, okay? This video is simply for educational purposes. Obviously, I'm not a loan officer. Now, the 3-2-1 buydown works the same way. Let's say your interest rate initially is at 6%. In year 1, your interest rate is going to be only 3%. In year 2, it's going to be 4%. Year 3, it's going to be 5%. And years 4 through 30, it's going to be at 6%. Another option is to pay points to take a 6% interest rate, let's say down to a 5.25% interest rate for the entire 30-year note. Now, the amount of money needed to do this is going to be something that you want to discuss with your trusted loan advisor. Again, credit scores and restrictions are going to be in play. And that just leads into one more thing, and that is when you're dealing with lending, the better your credit score, the more options you're going to have available. So you always want to take care of your credit. And hey, if you want to learn more about the buying process, hey, be sure to check out this video next, and you make it a great day.